Hey everyone, hope you're having an amazing day and amazing weekend, and also that you had a very good trading week. For this video, I wanted to dive into key levels. So, key levels in the DR theory are levels like the WDRs or the Tuesday DRCs, the multi time frames, VIPs, and also regular DRCs. And then also you have like the current DR levels. And what I wanted to dive into basically is in how price responds to these levels, like, and when you should be taking a trade, at what point you can come to the conclusion that price is rejecting it and that it's a valid method of entry. Because like in the beginning, I remember for myself it was very difficult to understand, not necessarily understand, but to know when a level is actually being reactive and when it's also sufficient to be trading off of that level. So when we're trading, during a session, we're waiting for price to retrace back into the DR after we see a confirmation, and then we have these certain levels, for example, where we're looking for price to return, and maybe also during a specific time frame. But it's not only about this just time and price, because the problem with these kind of entries is that we're assuming price that it can turn around in this exact retracement level, and it might do so in 10 or 20% of the cases. But when are you supposed to enter then? Like directly whenever it tests that level, or do you have to always wait until the time is over then when you're allowed to enter? For example, with the monkey entry. And in the beginning, the only thing that we did is we just had this cluster marked, like very high chance it's going to happen in this time frame, and it did this time cluster also, and then we would basically wait to see rejection from a level, and you would go over well, back then we only had, I think, I like the Tuesday DRCs and some VIPs, not all of them, or maybe all of them, but we didn't know the difference between all of them. But whenever there was like rejection of something, like here for example, it reacts to this level here, then we would take the entry as long as it's in the box basically. And although that does work, and maybe also produces good results if you really stick to that, there's often times that it just didn't work very well, and it's not necessarily too much related to time and price, but more to like where the price is reacting from which zone. And over time, basically, I didn't like using it anymore because it just wasn't very predictable. Which levels were going to react and which aren't, because sometimes price wouldn't just react to it, and you would question like, is this method really working? And later on, we got other types of entry methods like the monkey and the goldfish that produced much better results in terms of like the probability or win rate whenever you just enter when you see a setup. And later, I looked more into that, like why is that level rejecting and why not this level here? And I came to like the following conclusion, and that is that a certain level, a key level, is not relevant. So by default, it's not relevant unless it shows you that it's relevant. So if we look at the price action before this session, So we're gonna look at like these levels here. We're gonna look only at the regular DRCs. Then we're just gonna see at which levels are reacting. Okay, so here, for example, you see a very nice to the tick to this level here, to the bottom side. Okay, so and here we see also to the tick a close, but also like many wicks that are going above it. So here I don't see anything clean. Like these two wicks, they are reacting off this level, you know, they're going through and back, but it is very difficult to understand, to know whether it's exactly this level that is causing them to turn back, because it's not really accurate. It could also be different level. Maybe it's like a drip or multi-time frame. That's difficult to know. So I wouldn't regard that as evidence of that this level is important at this point in time. However, this level, you know, is showing us that it's more important because it's reacting to it exactly like the wick is touching it and then it reverses. And here you also see that there's a wick touching it exactly, and here's the body open. So we have more proof that this level is more relevant than this level, like at this point in time. So then if you would do that for like all the levels, and then whenever price is, you know, coming back to your time and price box, then you're gonna wait for like a rejection from the area that you marked as it's showing that it already has reacted to like in the past, so that you know that that level actually is relevant. And when you then see a rejection to the tick from that exact level, then again price confirms that it is still valid, still regarded to as a significant level by the algo, and then you enter. And using that method is going to exclude many of the losing trades. So just to complete the example, so before the session starts here, we're going to look at all the relevant points, and for that you can just count the times it touches a level to the tick, and it can be with the wick or with the body open or with the body close. Okay, so and we're looking for levels that have, you know, let's say at least like 3, 4, 5 or more exact reactions to it. And those are the levels that we're gonna mark and we are going to use or keep an eye on during the session. Okay. And also a good way to identify them often is where, you know, we have swing extremes. You know, so if price here is coming up and it's at this point, you know, here it's going back. So, and this is like the temporary top. So we call that a swing extreme. This is often a level that is very important. So if you look for some key levels in this area, those will tend to be very strong. So here's, for example, is a swing. Here's a swing, and price is it's something is holding back here. So you're basically just some kind of researcher or scientist looking for evidence of levels. Like if you would turn everything off and look at the naked chart, you could say that something is holding it back here. Something is holding it back here and here. And then once you go through all your tools, then sometimes you can find, you know, these very exact levels of why price was stopping there, right? So, you know, even here we can see like price stopped here, went up below, then it retested this level here and rejects it, and there was this M7 weekly DR was right in this level. So we go like through our list, and we're going to find out what's keeping price up or down. And like here, for example, we can see this multi time frame VIP, which is prices responding to that pretty accurately, like 1, 2, 3, 4, 5, 6, 7 to the ticks. So what we're gonna do then is we're gonna take some tool and we're gonna mark them so that we know during the session that that's an important level. Then again here we see several to the ticks to this level here. 1, 2, 3, 4, 5, 6, like many. It's not necessarily like a swing extreme, maybe it's this one that it's responding to. So let's go through our... Okay, so we do see like, this is a very important one. Do you see this regular DRC here? So here you see to the tick, and then here you see a lot of reactions to it, and it's also holding price up here. So this is a very significant level, and also happens to be the same one that we marked here already. Like, that's also the multi-time. So this is like a very strong level, we can say. And it already shows us here. So that could also be responsible for holding price back here initially. Then we're going to move up a little bit higher. And so here, if we switch this on again, you can see this level here. This regular DRC gets to the touch tick here, and here to the tick touch, and here you see another one, and here you see another one. So we could also mark that level, this one here. And we're just gonna like work our way up, and we also try to do that like continuously during the session. Like whenever price is heavily reacting to a certain level, giving us new information, we will use that. So here we see this trampoline, the special. Already see some rejections right here, and then here, just before the end of the ADR session, it somehow reacts as a platform. Then here we see another wicking into it, and this is also very nice to see. Sometimes price will have a very large wick and it touches exactly a certain level. That level is very important most of the times. So that can give you an extra clue of like which level is very important. Okay, then at some point the session will start, you know, and we will be looking at the levels that we marked and seeing what's gonna happen when price returns to that level. So like initially, like if we would play back, so the ODR session is starting right now, and we're seeing that it's an upside expansion. So ADR opened above the previous RDR range, and ODR is also opening quite a bit above ADR. So we do expect the box also to be forming somewhere like here. Now we know that, so we have a, let's say it's like a 70% probability that it's going to be above there, or that's gonna confirm in the long direction. Then we need to be able to get in on the move. So we want to get, we want to buy somewhere, and for that, you know, the only thing that we need is we need to know which level is important. You know, which level is, do we want to see a reaction from, or rejection to open a position. And of course for that it's very important to utilize this technique, because there's like many levels. So if I turn on everything, it's gonna be so populated that you don't even, you know, it's very difficult to know which is relevant, right? Because if you're just gonna say, oh, we're gonna buy whenever we see to the tick rejection, well, then you're most likely going to get a lot of losses, because you will already enter here, and this is a level. You could also already have entered here, because here it's rejecting to this DRC. But if we use the rule of, that levels have to have shown that they are relevant, then the only option we have is this level here. So here we see this regular DRC, which is also being respected again here and here. This trampoline here. So we would have like this trampoline, or this DRC here, or this multi-time frame here, which was a really strong level, if you can remember. And then possibly, like after, our analysis, price has done more stuff, and also shown us here, so to the tick to this DRC a little bit. So it's just one touch. These ones here, you see that they are not really reacting clearly to this level anymore. So I wouldn't be sure about this level. So this level here below, this open, has two to the tick touches. Could also maybe be relevant, but still not enough, right? And as I mentioned before, like the swing points sometimes are where we want to, where price is very inclined to react to. So here's this swing high and then this swing low. So ideally, we want to be around this level here, and then here we identified like, okay, this might be the zone here, because we see a lot of rejections to this zone, especially when price then at some point moves up above this level here where it was rejecting, and then using it as support. Then we know that this level is very important. And so ideally we want price to tap into like this level, or this, maybe even here. It can go, until here, because only here it will invalidate the upside expansion. So we're not going to take this as a rejection, although it's a rejection from a key level, from, it looks strong, but we're not going to take it. So the argument was correct, like it didn't hold, which is what we expected. So now we tap into this area here. And this is also the area that we expected price to, at some point is very likely to turn around again. But the problem, of course, is like it didn't touch it to the tick. It's just wicked near it. There was a rejection, a reaction, but not a rejection. And we close again in this level here, so that now we do start to get more evidence that this level might be strong. And as I said, like in the price action going forward, new levels could be shown, could be made visible to you, but that's still something that that you need to learn, like once you're working more with identifying these important levels. For now, like we're just focusing on what happened previously, and that's for starters like the best thing to do. So you could say like, okay, we now touch this area, so I'm gonna go open along here. Maybe typically we can put our stop below that level or below the low, and then aim for like a 9-point range for the ODR, or in this case just target the highs, because it already started very high. Or you could say like, okay, I'm really needed to the tick rejection, this is not enough for me, and risk also possibility of price not returning anymore. But that is often a very good way to go about it. Like if you're using this for the first time or are not very experienced, then that would be a very good thing, because then you're just going to focus on setups that are very clear, and that will also prevent like overtrading or picking setups that are too low quality, which may be this exact setup in that case. Okay, so here, what happens here? Let's have a look. So we get basically another wick, and we do start to see that this level is becoming more relevant right now. It's starting to show many more touches, especially like these ones. We have like now 3 to the ticks, and it's basically like a DRC, which is overlapped with a limiter. So that does make sense. And the 2 reactions from this level here is could be enough, you know, for an entry, for example. So we're just gonna continue, see what will happen. So price is moving up from here, showing a lot of relevance for this level right here. So the DR is formed and we're confirming bullish. Rejection from this level here. No rejections from below. This is the first one from IDR. Rejecting also from the multi-time frame. Going lower. So now we're seeing like a rejection from this area here, and probably price and time could be aligning, for example. But the problem is, of course, that this level by itself, if we would go back a lot more further, we can see some reactions here and here. And here we also see some wicks to it, but it's not very significant. Like this one is quite significant, but it's not really to the tick. I would say that more this level here, so this DRC right here, seems to be more relevant, and it didn't really touch that. So this may not be the strongest level ever. It could still work, of course, but if we're just going to look at the theory of identifying which level is the best level, we wouldn't probably pick this one. So we're getting more reactions, but it's not really precise. It is precise to this drip here. Already 4 touches, or 3 to the tick touches. Okay, so now we are tapping into this level. Now it's also going through it. So again, this level here. Here we don't see anything except for kind of bearish here. So you see it kind of stepping down a bit. So we reject from this level heavily, I believe. So we see 1, 2, 3, 4, 5, 6, 7 touches. Then it goes above and immediately gets slam dunked down. So that's not very bullish. But the only thing that, you know, if you would look at what we see here on all the levels, look, of course, it is a long confirmation. We are in a upside model, so we still expect price to go up. We don't know, you know, if it's going to be here or here, but if we utilize the method of looking at all the levels that matter most, the only thing we know is that this level is very important. You know, most of the levels here not really important. Maybe this one here could be important. But like if you look at the most recent price action, you know, we can see this level is very nice. See this level here gets was like a resistance, then goes up, becomes support, and yeah. So all these other levels are just not sure. They may not be very high probability, and you can also see that, you know, by how price reacts, like it goes up and then it goes down again. So it's not really reliable. So we're still waiting for price to show like rejection of a good level, and also very specific, because this may again be not so very specific. Yeah, so again, the trampoline, like this one is a bit stronger. Like you can see that here's some reactions. 1, 2, 3. So it's a possibility that you could take a trade here. But if you're looking for really for the highest probability, would still wait for more clean reaction. So let's see where we're at now. Okay, so here's this special. Didn't really show any relevance. Like here, price is just going through it. Doesn't really respect it. So just on the basis of that, wouldn't be too interested. There is, of course, the open is also aligning here. So there is some confluence, but risky. Now if you look at the multi-time frame, we see that here we have some nice rejections. 1, 2, 3, 4, 5 to this level here. So that does show us already some relevance. Quite good. Let's look at the other levels. So the other levels, well, mainly you could say that we could be interested in this level here or also here. So here we see the very nice rejections. Yeah, so the theory doesn't really change that much. This is very interesting, this area here, and this is potentially interesting because we see some small rejections here and price reacting off this area, but it's not too strong. Yeah, so basically like here you see like pushing into this level, then going above it back, but then it goes a little bit lower. So if we would remove everything, like the area that's most interesting is probably somewhere here, or here. You can fine tune it a little bit. So like this. Maybe something like this. And that corresponds to the DRCs mostly. And yeah, and then there's some overlap, of course, between the WDR. So now we're in the first level where it might be interesting. Okay, so we see to the tick. I keep saying that wrong. To the tick touch to the IDR low and this DRC, which we pinpointed like could be important. There's a limiter again, and yeah, I think that's like the most important part. So using this method, basically what we've done already is we excluded like many possibilities where if you just took a rejection, you would have already lost many R's. Like you would have taken this trade here, maybe this one, or maybe this one, maybe this one, maybe this one. But until so far, we just said that, okay, the only real levels are like here or here. So ideally, we'd only risk our bullet, in these areas. And now price is actually there. So this is, the case where we want to give it a try. You could even, if you're really trading, you would also, grab data. And, it would be even better if also data aligns exactly with this cluster and with the time that it's doing this retracement also. So we're just gonna have like a quick look. Hope it's not a news day. Didn't really check if it was, but let's see. Confirmation, second bucket, long, and price is basically at retirement. at 7. So 7 is a very low retracement cluster, and retirement is actually quite high, but it did go a little bit through it. It touched it. So officially it falls in this cluster right here. But I think you could take the trade here. You do have the possibility, the risk, of course, that it's gonna go to this level, because this level is more important than this one, definitely. Just more reactions to it. But sometimes price tends to react to kind of like a minor level, especially when data is really aligning. You could also say like, oh, I think both of these levels are interesting. You have 2 bullets to risk, especially when it's upside model. You want to utilize all the risk that you have, and you're gonna try this one. And if you get stopped out, well, then you're gonna try it again, with this one here. So that could be a plan, and just see, what will happen. Okay, so we're gonna turn this one on. Okay, so the first one gets stopped out, and now we're looking for a reaction to this level here. So we have this DRC mainly that we're looking for, so exactly this level, and this WDRC, not that much. Maybe here's some reactions, here's one, but I would say mainly this regular DRC level. And we could say that we can put our stop below this weekly DR, or maybe just one tick outside the DR as a normal retirement setup. Okay, so but first we need to see a rejection to this level. It needs to prove to us that it's still valid. Okay, so this is exactly what we wanted to see. Like, it dipped a bit below it, and now it closes exactly on this level. So that is precision. And now we just go long again. Put our stop below and target whatever. And that's a really nice rejection. So that is well, that I didn't pick this example because I knew this would happen. I was just backtesting and started the video at some point. So that's nice to see. But so we really see that this level was really important. Like, and you can mainly see that all because of the how price is swinging up. Price is going. Let's see, is there like a tool that well, it goes like this basically. So it goes up, goes down, and then goes up again. And every time that it stops somewhere, here we have these swing extremes, and we're just gonna look for these key levels that were responsible for stopping, and we're gonna mark those levels. And then whenever price comes back, because at some point it comes back to exactly this level here, we have it marked with which exact DRC or drip level is responsible for this, and we look for a rejection to the tick to this level. And that's exactly what happened. So it showed us that it's still relevant, it was a very important level, and that's where we're gonna buy. And of course the model has to align. If you are gonna buy against the model, then you see that those levels typically will hold price back, but it's just going to be temporary, and you're not going to hit your target or anything. So in that case, it just doesn't really work very, very well. And now it's the target is of course always up to you. whatever you decide to take. Master always advises, of course, the frame target, which is the median extension, and then the mode to the left of it, or just subtract 0.2 standard deviations from the median and target that. Or if you're having such a very high RR potential, it is definitely good to trail or use a little bit of a lower target, just to make sure that you get some of the profits, right? And not give it all back if it doesn't work out well, which is kind of high if you go for the high extension. So for example, you could already start trailing here and get stopped out maybe. Yeah. But the thing is that you never know, like, how, if price is gonna go very far away or not from this level. But what you do know is that if you're only gonna open positions near these levels, so the ones that really have shown in the past that they are responsive, then you're just gonna, your entries are gonna be way better. So you're gonna see these reversals happen a lot more often than when you just enter whenever there's a rejection from somewhere. This is, of course, I understand that if you see it to the tick rejection from this level here, that you're gonna buy it. And it's not a very horrible place to enter, because it does, for example, already show you here some rejection to it. But there's always, better areas. Or not always, but if you would only look at like the best areas, so where we see the most reactions to, you're going to increase your win rate by 10 or 20 or maybe even more percentage. So that's just what I wanted to talk about today. I think it might help, might benefit a lot of you that are struggling with choosing the right levels, and that get stopped out a lot, or have to re-enter many times to get the real move. So I would say experiment a bit with it, and especially also like in the forward testing. If you're trading, make sure that you are present on time, like 15 minutes before the DR formation, and start to identify these levels. Go back until the previous RDR session, and look at all the levels. Look at, maybe like identify first where is price stopping, here and here and here, and then go and toggle through all the different indicators and just look at all the precise rejections that you see. Mark those levels out and make sure that you still see them visually, so whenever price is forming in the ODR, that you know exactly where you would be interested or where you expect a certain reaction, and then just keep it at the top of your mind. And you will see that these levels are just way more relevant than all of them individually. Like, just keep an eye to those levels, see how price reacts, and then start taking trades whenever time or price is aligning from these levels, and you'll see like a major increase in your win rate. Okay, that's it for this video. Hope you find it useful, and I'll see you in the next one.